Hi guys, today I will be analyzing what the asset managers, so the institutionals and the hedge funds, are doing for the Sp500, for the Dow Jones and the Nasdaq. And as well, I will be analyzing the Japanese yen and the gold in order to understand what is their vision, for the possible outcome of the current crisis. So let's start with the Sp500. Here we have the Sp500 consolidated. The data are from actually the 5th of May 2020, so Tuesday the 5th. What do we see here? Actually, both of them, so the institutionals and the leveraged funds, have decreased their longs while they've slightly increased their short. Now here we see a difference between the asset managers and the leveraged money. So the asset managers actually are long, so 6 out of 10 are long, while the leveraged money are really short. So here we have the chart. Should be noted that actually the asset manager are above the zero, so they are net long, while the leveraged money are slightly less short. Actually, it's interesting to know that the asset manager are trading the correct side of the market. So in this case, for the Sp500, we should overview what the asset managers are doing. And what we see here, actually, while the Sp500 is at the same level in terms of candle, of the previous 4 weeks, we don't see here the same. So actually they have decreased their long position. So for the short term, I really believe we are going to see the Sp500 going a little bit back. Actually, again, it's not while we see an increase of the non-commercial. We know that the dealers actually are always trading the wrong side of the market. Not always, but until asset managers and dealers reach the opposite, an extreme, then we see a counter trend movement. Now let's see the Nasdaq. I will tell you immediately that between the Sp500, the Nasdaq, and the Dow Jones, Nasdaq seems to have the best scenario for the future. Most probably what they are doing, they are hedging. Actually, they are buying both asset managers and institutional stocks from listed in the Nasdaq, while they are shorting actually many stocks from the Dow Jones, because we will see that the Dow Jones has the worst scenario. So let's see, here we have asset managers and leverage money. Again, in this case, the asset manager are 7 out of 10 almost long, while the leverage money are slightly short, so 6 or 57, 58 out of 100 are shorting. Now we see here again, we see the asset manager the same level that they had like 4 weeks ago. So again, this let us think that we are going to see a slight fall down for the upcoming week, but nothing really extremely serious. So at the moment, I don't see this bullish movement keep going for the next week. Again, here we see the leverage money are below the zero, so they are net short. But now let's move to the to analyze the Dow Jones, which seems to be the most interesting one for those ones who are bearish for the market. As we can see here, while the long, we see just a slight increase, plus 130, while we see a much better increase for the short positions. So while we have plus 3,400 shorts, we have just plus 130 30 long. And here for the non-commercial, it's really understandable that they are actually short for the Dow Jones, mainly. So 7 out of 10 are short, while only 3 out of 10 they believe that the market is going up. And here it's really interesting, because we see that the non-commercial are below the zero, so they are net short, and that's interesting. They are still actually piling their shorts. So again, even in this case, we might see a movement to this area, from where we had the third candle. Now, And let's see more in detail. Okay, so here we have the asset managers and the leverage fund. Uh, Here we have more in detail vision about what they are doing. Okay, so they've increased the institutionals, they're short for almost 2,000. Okay, while they've increased only for 374 the longs. Why the leverage fund, they've increased more their longs than rather than shorts. But here, let's move here. And as we can see here, the asset managers, we have a more detailed view, okay? While the leverage money are actually 5 out of 5, 5 out of 10, sorry, are long. Here we see that the asset manager, mostly of them, they are short, while the dealers, okay, are obviously long because they take the counterpart, okay, the counter side. Now let's see here, and it's interesting because the no commercial now they are buying, while as we can see here, the asset manager they are piling their short since this period, actually since the beginning of February. Okay, since the beginning of February, we have seen here the price going a little bit up, while we've seen a huge decrease of their positions. Okay, so this was a divergence. Now we see that they are still piling their short. Same. Okay, we have seen here the leverage money are almost zero. And they are almost, sorry, close to the zero. Now, it's interesting to see what they are doing with gold. Okay, actually, for the upcoming week, we see a potential for a bit downwards for the gold, since they have increased their short while they've hugely decreased their longs. Okay, and but all the overview is that they are absolutely an astonishing long. Okay, 91% of them they are long. So the position here is quite clear. Okay, they are long while they are decreasing their long just for the short term. Okay, again here we see that the non-commercial are absolutely above the zero. Okay, they are highly invested, they are highly long, while the non-commercial are taking the wrong side of the market and they are below the zero. So we see here that this movement up, the non-commercial have increased their longs and decreased their short till March, while from here they have slightly decreased their positions. Okay, so what we might, but they are still obviously above the zero. So what we might see for the upcoming weeks, some short movement downs, but they are absolutely still in possession of the market. Okay, so they are absolutely up. And here we have more detailed understanding of what is happening here. So we have the swap dealers and the managed money. Okay, so the swap dealers are short, while the managed money are 90% of them they are absolutely long. So here we have a more detailed. Okay, so the managed money are here. They've slightly decreased their long positions. Now let's move to what we have here to the Japanese yen. We have the overview, and then we have the detailed positions for both of them. So what we see here, they've increased the short while they've decreased their long. Okay, but the overview is that they are absolutely long. Okay, so actually the main point is that they are above the zero, as we can see here. Okay, so they are buying the Japanese yen. Okay, even if we have seen for this week they've increased the short. Okay, and now we see the detailed view. So for asset managers and fund and leverage funds. So for the asset managers, we've seen an increase. So who are trying to take down a little bit the Japanese yen are the institutionals. So they've increased their short, okay, more than their long, while the leverage funds are still buying the Japanese yen. So what we see here, okay, yet they are absolutely long with the Japanese yen and with the gold. So what we can understand from this analysis is that at the moment, between the Sp500 and the Nasdaq and the Dow Jones, definitely we should short the Dow Jones against Nasdaq first and Sp500. So the Nasdaq seems to be by far the strongest index, okay, and it will be still in the future. Then we have the Sp500, and then the Dow Jones definitely is the worst index. Okay, they are highly heavily shorting the Dow Jones. Yet gold and Japanese yen seems to have a bright future ahead of them. Just they are trying to decrease for the short term their position, but they are actually asset managers and leverage funds are long on both of them. Thank you guys.